Okay. I haven't got any tables with numbers. Apart from this one. Right. This is the headlines about the news talks about tiers. This is actually quite simple. This isn't actually that much of a change. At the moment, your reporting in the SORP is divided into small charities and larger charities. Larger charities are those with income more than 500,000. Small charities are those less than 500,000. It was once linked to the audit threshold, but then the audit threshold went up and left it behind. Anyway, it's 500,000. They've just changed the terminology from small and larger to tier 1, tier 2. It still splits at 500,000. There is a new tier 3 at 15 million, which broadly corresponds with one of the thresholds for medium-sized companies. That's why that's there. Tiered reporting, it mainly affects the trustees report. Trustees report, that's what I'm going to talk about now. There are some changes. Largely, it's more reporting in tier 1 and a bit more in the larger tiers. There's some exemptions, there's some moving away, but actually largely it's slightly stronger. You're going to have to think about what you say more in certain areas. Tiers also affect how you set up your income and expenditure account and the expenditure and income notes and certain other notes. That pretty much stays the same, although there's a bit more guidance in the SORP. Big change, cash flow statement. At the moment, you will have a cash flow statement if your income is more than £500,000 in charity accounts. In the commercial world, you don't need a cash flow statement unless you're a medium-sized company, so broadly 15 million income, 50 employees, etc. 500,000. Who reads the cash flow statement in the charity accounts? Well, some people do. Ian probably does. But many people don't in many sets of charity. They're not so relevant. There isn't Boric. They're not so relevant. So what they're saying is cash flow statement tier 3 only, which is 15 million. But you might, if you are above the small company thresholds, financial reporting standards, FRS 1 and 2, will still require you to do that. So there's at least one charity represented in this room who I was talking to about this, where their income is at 7-8 million, but they've got property, they've got hostels, and they've got employees, which push them over the medium-sized threshold. So even though they're only 8 million, they will still have to do a cash flow statement. But that's probably the minority of charities. Yeah. Basically, a lot of charities are going to drop out of the cash flow statement requirement. You can still have one if you like, but it's not going to be required. Right. Okay, trustees report. There's about 6 areas I'm going to talk about here, and I think you will see that mostly it's more reporting. Go back. Volunteers. Right, you already have disclosures about volunteers in your accounts. Volunteers are pretty important. I think one weakness of charity accounts is that they underrepresent what you're doing in terms of your activities, because when you have a lot of volunteers doing activities, they by definition are not accounted for as expenditure. You're not accounting for a salary cost, so therefore a charity would say £500,000 of expenditure might actually be a much larger and more complex charity than that, because we don't account for volunteer time. So the disclosure to explain volunteer time is quite important. What they're doing is they're saying, well, we're going to make you shift. So at the moment, some of your volunteer disclosure is in the note, but when you shift that into the trustee report, there will also be a new must for the tier 1 charities. So that's the under 500,000, which is you must have an explanation to help the user understand scale and nature of the activities undertaken by volunteers and the input from volunteers. So tier 1 is more. I just want to actually step back, a bit of participation, if we can. Who, in terms of tier 1, 2, tier 2, tier 3, who feels they know where their charity sits? Who's not sure or doesn't know? Good, right, so who's tier 1? Who's tier 2? That's it, right, who's tier 3? That's fewer. Okay, right, I know where to aim it. So tier 1, you're going to be saying more here. Tier 2, you're going to be saying a bit more, but it's more of a shift. More interesting, and this is probably, I think, the next one is where we have is when I was doing this last night, there wasn't a delay, and that's come in. These things have people living within them, I'm sure. They impact reporting, right? If you told a couple of months ago, I was having conversations with people saying, well, yeah, they say they're going to put impact reporting in, but it's already there, so it's not going to have that much effect. I think I was wrong. All sizes of charities are going to have to be doing impact reporting. Are you doing it now? Well, if you're a larger charity, you may well have good impact reporting in your account. If that's the case, you probably won't be much affected. At the moment, the current requirement is for larger charities, more than 500,000. You may, this is not even a should, this is a may explain the impact you're making and may consider the long-term effects on beneficiaries, individuals, and society as a whole. Yeah? You may. That's a major check. So that is a must now. Even smaller charities must provide answers to the following questions. In what way has the charity's work made a difference to the circumstances of its beneficiaries and to the benefits of wider society as a whole? So all level, if you're not doing that sort of reporting, think about beneficiaries, think about wider society, you're going to have to be reporting. Does that make sense? Is it proportionate reporting? I don't know. I think it's quite a leap for the smaller charities. The Charity Commission's, or the SORP Committee's point of view on this is, well, what are charities for? They are there to deliver public benefit. So actually public benefit, if you're not explaining public benefit, what are you thinking about? It's quite a jump for the tier ones. It's going to take some thinking about. Who thinks that... I've got a question at the end, so I've got to come back to this. Also new for tier 2 is within impact reporting, you should also, tier 2 are also going to be encouraged to summarise performance in relation to environmental and social issues. There is some moving in, some gentle encouragement to reporting on the environment and social. Yeah, not mandatory, it's an encouragement, unlike the impact reporting. Right, reserves, moving on to reserves. Now, reserves at the moment, all charities report on reserves. Smaller charities report, say, our reserves are free reserves, they used to be called, amount to X, and this is why and this is our policy and why we have them. Larger charities over 500,000, which includes all the audited charities, have to say more. They have to say, well, our target is this, and this is where we are, and this is the difference, and if it's a significant difference, this is what we're going to do about it. They also have to say, in coming to our reserves figure, we've earmarked certain amounts to this purpose. And actually, we've earmarked it for this spending, and it will happen within this time scale, to give a bit more believability to the reserves figure. The change is those additional requirements to actually think about your policy, to actually think about the difference. What does it mean? What are we going to do about it? Is it meaningful? Is the earmarking meaningful? That's now going to apply to Tier 1, Tier 2 and to Tier 3. So the very smallest charities who are following SORP accounting are going to have a mature and show a thought-through reserves policy. That is a difference. Given that reserves is the area which, at the majority of audit closure meetings, this is what we're talking about with the Finance Committee about that disclosure, because it's actually not that easy to get to. I think this is going to take some thought, certainly for the smaller charities. It's what we talk about with every charity every year anyway. So that is a jump. That is the lead. Think Tier 1, does your policy consideration could cover the sorts of things I was just talking about. There will be a few more disclosures in the accounts. For instance, sometimes you've got a reserves number and you look at the accounts and you think, well, how do we get the reserves number from the accounts? And no doubt trustees have this, but also we as auditors have this. We can't always see where they come from. If that's the case, there will have to be a note in the back of the account giving the difference, which is giving the reconciliation, which I think is kind of helpful, because I think anyone reading the accounts can understand. If you understand where the number comes from, you can have a policy about it. If you don't understand where it comes from, it's meaningless. So that's useful. Next one, legacies. There's a bit more extra. The rules on there's some noise about legacies in the SORP. Actually, the rules don't change, on recognition don't change. This is an extra disclosure that says if you've got a debtor, if you've included a debtor for a legacy not received, brackets, it might not be received for several years while they're winding up the estate. Just talk about that in the reserves policy because it's not free, so they're requiring a disclosure on that. Plans for the future. At the moment, non-small charities have to describe plans for the future. That is now extended to all charities. The argument being that every charity has to think about going concern. To think about going concern, you've got to think to some extent about the future, so why not make people talk about it? It's not onerous. It's another thing that will have to go in small accounts. Finally, last bit, this is a new section. Impact reporting, as I say, impact reporting was already there. I think that's the major additional disclosure. Sustainability reporting was not there at all. Tier 3, £15 million income charities will have to talk about sustainability. It is now gently encouraged for Tier 1 and Tier 2. Explain, and what is sustainability? In the terms of the SORP, it's ESG. It's environmental, social, and governance factors. Yeah. So, yeah, it's a big new section, sustainability, but for most charities, those under 15 million, it's an encouragement towards, not mandatory. Right. Basically, just to hand it. Who thinks the impact reporting is proportionate? Making everyone talk. Making all charities describe impacts on individuals and society. There's some. Who thinks it's not? So there's quite a few undecided, just thinking about it.
Just a thought.
Yeah.
I would thought any charity with bid writing is going to be doing impact reporting anyway. Yeah. So it's just going to be taking that, putting it into the
Yeah, absolutely. But quite a lot aren't.
Yeah.
Robert, how many of you got on bid writing? You also have all got nice endowments, haven't you? Yes. Yeah, so yes, absolutely. If you're bid writing, you don't have to do much thought. If you're not, you have to put a bit of thought into it. I think watch this space. These might just adjust. Talk to us if you want to talk through the consequences.